mid part of this long range bear candle of the 12th of September, which is indicating that 41,000 is going to be the strong resistance. As of now, the mid cap is facing resistance around 41,000 levels. If it moves above 41,000, then we are likely to see some momentum traction in the mid cap. Otherwise, we could see the mid cap sliding down to 40,000 level, which happens to be a 20-day EMA on the daily chart. So over the last 3-4 months, this 20 period moving average has been holding on, sustaining the mid cap sector is sustaining this moving average. In case the overall chart pattern, this lower high is confirmed, in case we see the further weakness along with the market, what we expect the mid cap, there is a possibility of further weakness in the mid cap below the immediate support of 40,000 levels. On that front, we could see some weakness in the broad market indices as well as mid cap and small cap stocks. On the weekly, what we observe last week, we have seen a formation of a high wave type candle pattern after a up move of last 25-26 weeks, and after that, this week the mid cap has started to decline from the higher levels. We can see the trend line. So friends, we can see the trend line, the long-term trend line, very strong resistance has acted and played out very well this week so far. That last week we have seen the bearish candlestick formation. This week we have seen the decline. So far this week, the week is not yet complete, but the overall chart pattern is not so good for the mid cap stocks. On the small cap, similar kind of a pattern is happening as it happened in the mid cap. The same, the 20-day EMA is acting as a strong support so far, and currently this small cap is acting as a strong resistance at the mid part of this candle of long range bear candle. What we have seen a sharp decline of 12th of September. So if this lower top confirms, then we are likely to see a downside breakout of the 20-day EMA, which is a strong support of the last 3-4 months around 12,450 levels. So this is the picture. On the weekly front also, we have seen this small cap has moved up, currently placed at a strong resistance of the long-term trend line around 12,800 odd levels. So things are dicey for the mid and small caps. If further decline continues, if moves below the immediate supports of 20-day EMA, we are likely to see weakness in mid and small cap stocks. The stocks, whatever moved up sharply recently, we have seen sharp momentum in the many of the mid cap stocks, and those stocks we are likely to see a good amount of downward correction going forward. So other stocks, other sectors, there are few sectors, FMCG, IT. IT is the one which is currently holding out, moving sideways range in FMCG. They are not showing any weaknesses. They are not moving with the market right now. As of now, they are slightly outperforming. The PSU banking, FMCG, IT, PSC are still holding at the higher levels. They are not showing any significant reversal on the downside, but at the same time, other sectors like the prominent sectors like Bank Nifty has witnessed decline with the gap down opening. So we are likely to see further weakness in the banking stocks. Metal are looking weak. Media, oil and gas, and financials are looking weak on the for next few sessions, or at least you can see 1 week. So the overall trend remains weak. To reiterate, the Nifty has started to form a top reversal confirmed with the downside gap. This downside gap indicates that we are at the top reversal pattern at the highest all-time high of 20,200 levels. There is a possibility of decline, and important supports are placed around 19,600, 550 odd levels, and long-term trend remains intact. After the decline down to supports, we are likely to see some decent bounces from the lower levels. At the same time, broad market indices like mid cap and small cap are not showing any convincing signal for the longs. So we need to be cautious for the mid and small cap stocks as well as for the market, at least for the short term. That's all from Nifty and the stock sectors broadly that I would like to hand over the session to my senior colleague, Mr. Devarsh. Over to Devarsh.
Okay, thank you. So now, let me show my screen. Yeah, is my screen visible?
Yes, it is visible.
Okay, so thank you, Nagaraj, for the technical view. So views from the technical side is that market have started a short-term correction and we need to be cautious. And this is the behavior which you can see replicated in our recommendations also. From May, we have been issuing BNPL or BSPL MTF e-margin calls. More than 100 recommendations have been issued and successfully booked. Recently, we have been trying to reduce the beta of our portfolio. We are trying to give more large caps and have reduced the number of recommendation issued. And recently, we have, even in small profits, we have issued and closed some of the recommendations so that the overall exposure to the market has been corrected and reduced. Similarly, on the fundamental side, we have booked 4 more this week, and now the tally has almost gone to 100. PNB Housing, Satin, Balrampur Chini, and Gujarat Themis Bio. All these have been able to achieve their second or first targets. On July 21st, we have issued a report on DIY SIP where we have recommended these 21 stocks which every investor can invest. This is a mix of aggressive and conservative stocks where you can invest every week and create a long-term portfolio. This week, we have issued 3 more. Couple of more recommendations on the fundamental side. First is the Narayana Hrudayalaya at 1092 with the targets of 1195 and 1265. Narayana Hrudayalaya is, we know, is the strong brand in India and abroad. It is one of the famous healthcare company, multi-specialty hospitals, and we feel that at current valuation, the growth offers us the opportunity to invest. Similarly, we have issued a report on SOM distilleries for 323 at a target for 357 and 385. There we are expecting that its 3 millionaire brands of beer will do the trick for growth. Another PSU bank, Union Bank of India, we have issued at 94 for the targets of 105 and 116. So these are the 3 new recommendations on the fundamental side we have issued this week. And apart from that, we will keep issuing the long-term recommendations by SIP, and we will also issue recommendations on the MTF side. Overall, it is expected that the markets will be little weak, so better to be safe than sorry, as we have been pointing out in our weekly webinars, fortnightly webinars. It is time to reduce your risk and increase the capital, increase the cash. And if you have a trading position, it is better to have a strict stop loss. So this is the message we have been giving out for last couple of webinars, and I hope you have paid attention to it. If you have heeded our advice, you would have reduced the risk in the market and you would have able to save some capital in the fall which we saw today. Now we have some time to answer your questions. So rather than any stock specific question, we would love to answer any question you may have on the material which we have presented or on any other sectors if you seek our opinion. So depending upon the screen you are using, there should be a question mark symbol on your screen. Press that symbol and put in the question. It will pop up here in my screen and I'll try to answer as many as possible. Amit is asking, what is your view on Fed? So Amit, the expectation from Fed is that they will not increase the interest rate today, and they will say that they will be dependent on data. If inflation goes up, then only they will raise. Otherwise, they are done with the hiking the interest rates. That's what is expected from Fed today. Then from next tomorrow we have Bank of England, and day after tomorrow we have Bank of Japan. Salil Gupta is asking, so it is not certain, but as Nagaraj pointed out, immediate supports are there, and this is an evolving situation. So as and when we will find some strong support, we will definitely highlight that the markets have found some support, and then we will turn bullish on it. Right now, it's an evolving situation. It is not proper to look for labels. So this is the SIP slide on which DIY SIP report was issued, Mr. Raghu. This is the price at which we have asked investors to start accumulating this. So it is not that it is an old or a stale information. July 21st, on the day when these prices were there, we have recommended these stocks. That is what we are trying to convey via this slide. Okay. Crude. So crude oil prices is definitely, Mr. Chintan Maniar, it's a question. If it goes into 3 digits, then obviously it will have an impact on Indian markets, and that's why if crude oil goes into 3 digits, then obviously the inflation across the world will go up, and that will have an impact on interest rates. So it is a remaining a question. We don't think that it is going to shoot up that much right now. So such situation is under control, but it is an evolving situation. We will keep an eye on that. All right. I think I've answered most of the question. I will not be able to answer any questions on individual stock, especially the HDFC group stock. So we will not be able to answer that. All right. Nagaraj, any closing comments?
Yes, almost all covered. Market is at the higher levels. One needs to be cautious, especially with mid caps and small cap stocks.
Right. All right. Thank you everyone for joining. And this concludes our midweek webinar.
Thank you. Thank you, everyone.